incredible. You wonder, what are people thinking? Well, part of what they're thinking is that this is going to last, that there's a commitment from our central banks to do things like quantitative easing.
Don't forget to like and subscribe if you haven't done it already.
Let me just talk first of all about the surprising levels of exuberance in markets today, which is I'm going to talk about, there are excesses in all three basic major asset classes: stocks, bonds, and real estate. I'll talk about those, and then talk about inflation in consumer prices, which is an emerging narrative. So here, so I'm going to talk about those three asset classes. This is a plot using my, or the blue line is not mine, it's the Standard & Poor's Composite Stock Price Index, which since the 1950s is called the standard S&P 500. In real terms, I've taken the inflation out of it. And I don't know if it strikes you, but this behavior of the index looks awfully strange right now. The green line is earnings per share that corresponds to this, partly backdated by Alfred Coles to 1871. And you can see that it's been choppy. It's not clear that we're not on an earlier trend. Why are the prices so high now? What's happening? I can't change the page. I'll leave it like that. It doesn't look quite as dramatic if you plot the blue line on the log scale. But even there, that's because it magnifies, so that equal distances on the vertical axis represent equal percentage changes. But still, we're doing something quite dramatic here, since that's the so-called great financial crisis or great recession 10 years ago. This is Canada, just for comparison. They have the same behavior since 2009, but maybe less dramatic. I want to compare countries, and this is from the Barclays website. It's the CAPE ratio that I've been advocating for decades now, cyclically adjusted price-earnings ratio. And you can't see, there's too many countries here. You can see there's a wide dispersion across countries in how their stock markets are doing. The bottom performer here, you can see right there, is Turkey in terms of the CAPE ratio. And the second bottom is Russia. And then up here, the top performing country in terms of the CAPE ratio is the Netherlands. And the second highest is the United States. So why are these so different? The CAPE ratio looks historically very low in some countries and very high in others. I think we have to turn to stories or narratives about one reason the U.S. is so high is that it is strong in information technology, which is emphasized by the recent COVID-19 experience. But I don't have an answer yet, and I think we need more systematic work to try to understand these things. Just since you couldn't see Canada on the previous chart, I'll show it again. This is the CAPE ratio in red for Canada. Canada seems to kind of look similar to the U.S., except the level is quite different. The CAPE ratio is up at about 40 now in the U.S., and it's merely in the 20s in Canada. The second market is the bond market, and you can see this is a plot for the USA and Canada back to the 1950s. It's a remarkable pattern. They were both rising until around 1980, and they've both been declining ever since. It doesn't match up to the behavior of the stock market. Look how low it got. This was last summer. It got down to something like 0.5% on a 10-year bond. Incredible. You wonder, what are people thinking? Well, part of what they're thinking is that this is going to last, that there's a commitment from our central banks to do things like quantitative easing. This is a plot of the net asset purchases for 5 central banks. You can see both the Federal Reserve and the Bank of Canada. Well, you can see it clear. It's hard to see. That's up there, that little green at the top is the Bank of Canada. But they're doing it too. There is somehow a consensus around major economies about how to deal with the crisis. And it's quite different from history. So you might explain the stock market in terms of this policy. But the stock market hasn't been so sudden. It's not, quantitative easing was nothing like it is now until 2020. And the trend is going up for a long time. Here's the M1 money supply comparing the U.S. And Canada. They both are, well, the U.S. is more dramatic. But there's in fact, it's quite dramatic. You can see that people would think that something fundamental has changed. People who look at these data. But most people don't look at these data. We're talking about most people when we try to understand these market events. So I just... here's the consumer price index for the U.S. and Canada. There's 2 lines that are separated because they're different base years. So for the U.S., the index equals 100 in the early 1980s, and for Canada, the base is around 2015. But they seem to be going up parallel. Nothing dramatic here. Maybe, well, it doesn't look dramatic when you plot it on a log scale, as I have. This is the great inflation. It was in both of our countries. So why did that happen? And why is it more stable now? I'm going to argue that we need to study the narratives. The third market I'm talking about is the housing market. And I like to create data that goes way back. There was no, for the U.S., this is for the U.S., this plot, there was no index of home prices that went back 100 years or more. So I spliced things together and I got an index which may not be perfectly accurate. But it's really remarkable what home prices have done. Between 1890 and 1990, there was almost no change. This is a repeat sale index, like a James Shiller index. And then there was this huge run-up to 2005, and then it collapsed. And then another run-up again. Look, this is in real terms. What is going on here? It has nothing to do with building costs or population growth or even interest rates, unless you talk about the narrative that it generates. When interest rates get practically at zero, it creates talk of an opportunity, once in a lifetime opportunity, I guess. But it's not something that looks like it would explain the behavior of home prices. I compare that with Canada. Canada is doing very well lately on its home prices. It looks different in this chart. This is nominal. I just took this off the Terranet website. But they are soaring, especially in major cities in Canada. And this plot shows the blue is the rate of change. The black line is the level of prices. So there are big changes in Canada as well. It's just amazing what's going on here. I made a plot that's like the Terranet plot for the U.S. And they look kind of similar. But we were more dramatic in the U.S. in the price falls in the great financial crisis.
Thank you guys for watching. I hope you enjoyed. Don't forget to hit the like button and to subscribe if you haven't done it already.